पिन 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 बोल के कुछ आ जा रहा वर्ड पिन। अमित जी एक बार फिर से काइंडली लॉगिन कीजिएगा ना।
मेरा अनम्यूट हो गया है।
अनम्यूट हो गया है लेकिन कोहोस्ट नहीं बना। अगर आपको कोई शेयर वगैरह करना हो, मैं कोहोस्ट नहीं बना पा रहा हूँ आपको।
अच्छा, नहीं शेयर खाली हेमंत करेगा, तो आप हेमंत को कर दीजिए।
हाँ उनको बना दिया है
मेरे पास।
तो देन फाइन विष्णु जी, देन इट्स फाइन, विल मैनेज।
ठीक है, थैंक यू।
Good evening, Amit Singh. Good evening.
Good evening, Pramod ji.
Good evening, Hemant sir.
Good evening,
Good evening.
Good evening, sir.
स्टार्ट करें विष्णु की 2-4 मिनट वेट करना है।
स्टार्ट कर ले
विष्णु स्टार्ट ना।
हाँ यस।
मोहित वाज हियर, मोहित कहाँ निकल गया? Good evening, friends. We are going to start our discussion on the revised Schedule 3 and Caro-2022. The critical aspects of these two new new amendments. There will be revised Caro-2020 and the revised Schedule 3. We all know there are multiple changes in both this Caro and its revised Schedule 3. And some of them are really very critical one, where even the auditor has to really work hard and have to safeguard themselves before reporting. Like in the Caro, there is one provision where one has to say about the current financial health of the company to meet its financial obligations. Here one has to really work hard and to have all kind of ratio analysis and the data to understand whether the company will be able to meet its financial obligations and what can be the impact in the coming years also. Similarly, there are the provisions where the auditor has to report on the quarterly statements which have been submitted to the banks and as per the accounts. Again, the compilation of the data and to understand it, to verify the accuracy and to certify the accuracy is a very tough job for an auditor. Because in case of a manufacturing companies with multiple locations, to compile the data on time and to submit is, for any person, it's a very difficult task. So without taking much of the time, I will request my co-speaker, co-convener, Mr. Vishnukant Agarwal, to introduce both the speakers, Mr. Amit Somani and Mr. Hemant Bhasin, and then we'll request them to start the proceedings. One more thing, we have sent a host of queries to our learned speakers, to incorporate in their presentation, and they have incorporated each and every queries which has been raised, maybe of a trivial nature, for them to address, because we do not know where we are making the mistakes. We consider it to be trivial, but again, we may be making some mistakes somewhere here and there. And any queries, I request to raise on the chat box, or at the end of the session, they are requested to raise the queries as much as they want to. Because we want to keep this session very, very interactive. This has been our mandate to our learned speakers. And in our flyer also, we have stated we will be raising more and more queries. So please come up with the queries so that all this can be sorted out here. Now, Vishnu, please introduce our speaker, Amit Somani ji and Mr. Bhasin.
Welcome, CA Amit Somani ji. CA Amit Somani is a partner, audit BSR and Company LLP. He is a chartered accountant and US CPA. He has got 22 plus years of professional experience. He is co-opted member of EAC, a prestigious body of ICAI, for 3 years. He has extensive experience in Ind AS and international accounting, IFRS. He has extensive experience of India and US listed companies. He has extensive experience of auditing large global companies directly and through global capability centers. He has advised clients on several complex contracts, business combinations, shareholder agreements, mergers, etc. He is a lead signing and audit partner on marquee clients, current and past, in technology sector like TCS, Wipro, Emphasis, UST Global, I get. Then when it was acquired, when it is acquired Capgemini, then in health sector he has audited SCG and Narayana Hrudyalalaya. In consumer and industrial sector, he has got experience of signing 3M India, Wipro Enterprises, ABB, marquee name in industrial markets, Diageo, Quest, etc. Welcome, Amit Somaniji. We are eager to hear your experience, thoughts. And now, secondly, I introduce CA Hemant Bhasin. He's a director of audit. He's in BSR LLP itself, na?
Yes.
Yeah, he's director of audit BSR. He's a chartered accountant. He's director of audit since 1st April 2020. He has got 11 plus years of professional experience. He's part of the firm's technology core team for audit. He's part of firm's revenue recognition topic team. He has extensive experience in Ind AS and international accounting, IFRS, US GAAP. He has extensive experience of India and US listed companies. He has extensive experience of auditing large global companies directly and through global capability centers. He has successful regulatory inspections by PCAOB and QRB. He has advised clients on several complex revenue contract business combinations, share-based payment award, etc. He has served leading clients like in technology sector, Wipro, Emphasis, UST Global, Micro Focus, iGet, when acquired by Capgemini, Hinduja Global Solution, Healthcare, etc. In consumer and industrial sector, he has advised Herman Cardone, Herman Miller, and in venture capital sector, he has served SBP, Omnivore, etc. Welcome, Hemant Bhasin.
Thank you, sir.
Yeah. Pramod?
मोहित कुछ बोलना तेरे को?
नहीं, we should start the program.
Amit ji, now you can start your program.
Thank you, Pramod ji, Vishnu ji, Mohit bhaiya. You know, the only thing I wanted to mention to all the learned members and participants is whatever view we present is our personal view and in no way represents our firm's view. We will try to give you as much practical insight on what in the way we have applied the new Schedule 3 and Caro. And we just want to make sure that you gain from our experience, and if there is something good learned, you will be very grateful to that as well. So what we have tried to do is wherever Schedule 3 marries with Caro, we have tried to cover in one slide only what is the obligation of the company and what is the obligation of the auditor. And as we walk through the journey, it's very important that we understand the obligation of the company very well. So often, as auditor, we make obligation of the company also our obligation. That is not how we should deal with this, because it is complex, it is detailed, and needs a lot of cooperation from the company in terms of doing the right things. So we'll cover it in detail. And as Pramodji mentioned, we will have to make sure that we cover your queries also wherever we can in the slide itself, or we'll take it up at the end, whatever is not covered during the slide. So I am my co-presenter Hemant. We worked together for more than a decade, and we'll try to present the Schedule 3 and Caro to you and give some practical insights. So we can move to the next slide. I think the key things is there are reporting obligations by auditors, and there are many new obligations which we have to be careful about. The Schedule 3 has come, Caro has come. There was one very big obligation on audit trail. Basically, the Companies Act wanted accounting software to have an audit trail and the auditor to comment on that audit trail. Basically, to say that there is an audit trail, it has not been tampered with, and it is being preserved for the required period. Thankfully, that requirement has been shifted to 1st April 23, so it doesn't immediately apply to you. But what is very important for us is to make sure that we work with the companies, because it will apply from 1st April 23. And when you give your March 24 report, you have to give the opinion on the entire year. So you have to work with the company right now itself so that they are ready by 1st April 23. there is an obligation on funding transactions where either you are the initiator of the fund or you are the intermediary. I mean, that is coming the main body of the report. We'll cover it as part of the presentation. So a number of things have come, a number of obligation has come, and it's very important to understand what is company's obligation, where does our obligation start, and what is our exact obligation. So that is what my focus will be as we present forward. Caro, there are many new clauses, no rocket science, I would say. Most of it you will be able to find it very easy to implement, but there are some nuances to some of the clauses which you should be aware of and be careful about. I think amendments to Schedule 3 will lead to some reclass, lead to some restatement of the prior period comparatives wherever you're following Ind AS, and I think that's the area to focus on. There are some additional disclosure in the board's report, but that's not the scope of my presentation. There are hardly 2 in number, but that is something you can easily find and you can deal with that. But the real judgment areas in the Schedule 3 and the Caro. Schedule 3 and Caro applies for all year ends for March 22 and onwards. If you're doing a December year end company, it doesn't apply, but for March 22, it definitely applies. Even if you do a December year end company, which is not very common, but you're doing a tax audit for March year end, our view is that Schedule 3 will apply for the tax audit purposes. Okay, so it's very important we keep that in mind. March 22 year end is what is relevant as far as we are concerned. Yeah, even I think I didn't want to bore you with the interim financial statements because the first year where it applies is March 22. So interim is largely gone. June 21, September 21, and December 21 is largely gone. So I won't bore you with that because that will not technically apply to you. Comparative information has to be restated for whatever reclass is required. And if you want to put a note in the financial to explain all the reclasses, I would encourage that. Even if you don't want to put, it's okay. It doesn't make a big difference. But it all depends on you what you're comfortable. There is a requirement under Ind AS that whenever you restate the comparative numbers, you have to present the third balance sheet. What it means is opening balance sheet. So for example, if technically you were to restate March 22 accounts, you have March 21 which got restated. And technically you are required to give an opening balance sheet of 1st April 20 also along with these 2 balance sheets. Now that's really not the requirement when you're doing the changes because of Schedule 3, because that's a regulatory change and not a voluntary change in that sense. There are a number of disclosures in Schedule 3 which apply only to standalone financials and it doesn't apply to consolidated financials. And that is something which you should be very careful about. For example, the ratio analysis is not applicable to consolidated financial, it's only applicable to standalone financials. And when you talk to your clients on those kind of changes, and some of these sensitivities come down because they are more sensitive to console numbers than standalone numbers. So it's very easy conversation. So we'll talk about some of the disclosures which do not really apply to console financial and it's only a standalone financial statement disclosure. I think the first thing which has come in the financial is whether the title deed of immovable properties are in the name of the company or held jointly. So basically there is a disclosure format which is required to be given for something which is not in the name of the company. If something is not in the name of the company, please include it. It is not required to give all the names of the properties where it is in the name of the company. It is largely only for where it is not in the name of the company. And it is also very important to note that sometimes the companies go through amalgamations, mergers, and many other transactions where the title deed of the property, though technically awarded by the court, has still not moved in the name of the company. Even those are in the purview of these disclosures. You have to bring out that these are the properties though acquired under the merger order or the acquisition, and you are in the process of doing it. But you cannot say that because there is a court order, I don't need to disclose, because technically it is still not in the name of the company. It is not novated yet, even though legally it is novated. So that is one interpretation we have taken. And wherever the leases are not in the name of the company, that also is required to be disclosed. And basically, it's a legal document. Whatever is the legal document, you rely on that, whether it is in the name of the company. So that is the requirement in Schedule 3 now. And Caro always had a requirement under 3.1c where you have to disclose this. Yeah. There is a requirement of capital work in progress and intangible asset under development. You have to give certain additional disclosures in Schedule 3 now. Now, this is typically not a Caro requirement. What it says is you need to bring out the aging schedule of the civil. I think what the regulator are saying, we would like to see the quality of capital work in progress. If something is really aged, why have you really not capitalized? What is happening in the company? Where is the money blocked? And if something is really aged, have you really abandoned the project, leading to impairment? You know, those kind of qualitative determinations we want to make. They actually want to make a distinction between projects in progress, which is a normal thing. Projects temporarily suspended is also part of this disclosure. Okay. And it becomes more challenging when there are projects which are actually delayed because of all COVID kind of situation, whether they fall in this definition or not. And companies have taken some interpretations around it. So that is one of the requirements. So it's a very, very detailed requirement in terms of what you put out. The other very interesting requirement is where the projects which has become overdue or exceeded the cost as per original plan. Now, this is where the bone of contention starts. Sometimes there is an original plan which says you need to spend only 100 rupees and you ended up spending 110 rupees. Okay, so that 10 rupees is an overrun and you need to bring out as a disclosure in the Schedule 3. A lot of companies say my plan keeps on changing. It's a rolling plan. How do you really do certain amount of disclosures, particularly on overdue and cost overrun, because we don't capture it that way. So you will see a lot of big companies, including TCS, who have done certain kind of disclosures in this area. But what is important is this is a requirement. You have to bring out projects in progress. You have to bring out temporarily suspended. You have to bring out where the overruns are. So it's a complete transparency as far as the shareholders are concerned. And obviously there is a lot of interaction with Ind AS 23 or the borrowing cost capitalization. If there is something delayed, how do you deal with borrowing cost? I'm not getting into all of that. I'm just restricting myself on the disclosure part, which is the requirement in the financial. The good part is we are at a point in time where a lot of listed companies have come with their audited accounts. Depending on which sector you're auditing, you'll find a lot of examples in public domain on how people have dealt with this. So this is the requirement where you bring out the fair valuation of PPE, the revaluation, and all those kind of requirement in relation to the fair valuation and these kind of things. There is a bit of a conflict between what the accounting standard says and what the Caro would be saying or a Schedule 3 would be saying, those kind of things. Whenever you have a situation where there is a conflict between a particular guidance note and a particular standard, the standard will always prevail. So this 10% kind of criteria may not be there in the standard. So you will have to follow the standard in that sense. So you'll have to give a separate disclosure on what is the revaluation effect and whether the valuation was carried out by a registered valuer or not. So it's a fairly straightforward disclosure. It is required to be disclosed in the financial, and there is a Caro comment as well. For Benami property, it's the disclosure only kicks in if there is a legal proceeding and not in general situation, because frankly, the auditor obligation or the company's obligation is very difficult to capture. If there is a proceeding that the company is actually having Benami properties in their name, then there is a disclosure requirement under Schedule 3, what needs to come in. And there is a disclosure requirement in Caro as well on what needs to come in. The idea is the regulator is asking us to identify these properties and bring it out transparently to the shareholders. And obviously there are many liabilities associated to such kind of Benami properties and legal proceedings. So they would like to know everything. The Loans and advances to specified person, I think this is straightforward disclosures. You bring out promoters, directors, KMPs, and related parties. It's very specified parties as far as Schedule 3 is concerned. In how you make out the disclosure, what is the amount outstanding, what is the percentage of total previous period. And the focus of Schedule 3 is only the specified parties. Okay. The employee advances is not covered as part of the Schedule 3 disclosure, but employee advances are covered as part of the Caro disclosure. So Caro is not specifically restricting yourself to the specified parties. It covers every loan or advance, which is why the Caro will cover employee advances. And even if you have done an intercorporate deposit to any particular bank, which you are classifying as loan, that will also come as a disclosure. Slightly illogical kind of thing, because that may not be the purpose of Caro, but actually the interpretation plays that we need to disclose everything in Caro. As far as Schedule 3 is concerned, only the specified parties will come. Promoters, directors, KMPs, and related parties. So that is the distinction between Caro and the Schedule 3. The other important thing in this area, we can go back, terms and conditions, particularly whether it is repayable on demand, specifically if any terms or period of repayment is there, all those kind of things are also required to be disclosed. Okay. Trade receivable, there is
यार मैं टाली का सेल्स नहीं भेजा क्या?
the only thing which is coming
खाली
out of
Excel
it is
टाली का सेल्स नहीं भेजा.
there is some disturbance on the call. Okay, so the only thing which is happening in terms of the trade receivable is you have to give an aging schedule. Okay, so there is a lot of debate whether the aging schedule should be given on a gross basis or whether it should be done on a net basis, which is after provision for doubtful debts. The view we have taken is that the intent of the standard is gross basis only. So you actually disclose all aging on a gross basis. You have a choice to give aging or provision, or you can lump it as your overall reconciling item to financial statements in the table. You don't need to give in the aging bucket. So that is one important factor. It is divided into categories on how you present the aging. Undisputed considered good, undisputed where there is a significant increase in credit risk, undisputed where credit impaired, and then there is a category for disputed due. There is a lot of debate on what should be the disputed trade receivable. Okay. Now, frankly, if you read the guidance note, it is pretty open-ended. It says that if there is any positive evidence lying in any email of the company that there is a likely dispute, it becomes a disputed due. Now, the biggest challenge is for the company to capture this. It is hard. It is highly impossible to capture on whose email and how many employees would be there. It will be very difficult to capture a completeness around this. From an auditing standpoint, you will never be able to have a completeness of this, and you'll never be able to actually get to the completeness of what is disputed due if you were to take that interpretation. So what our recommendation is that disputed due should be something where you either have a legal proceeding, which you can easily get from the legal counsel, or you plan to do a legal proceeding. That is something we should bring it out in the disputed due. One of the popular question is, if there is a confirmation I have done with the debtors and I have a reconciling difference, or there is a difference between the confirmation and the company's accounts, does it mean it becomes a disputed due? Frankly, only by that fact it doesn't become a disputed due. There could be reconciling differences. There could be very acceptable kind of differences. But if you come across a situation that even after adjusting the acceptable difference, for example, I have made the payment, but you have not received it. I have dispatched the goods, but you have not received it, whatever. But even after that, if you come across some differences and you believe that is disputed in nature, might well as make a disclosure. There's no harm in making additional disclosure. What is very interesting that other than trade receivable, if it is unbilled receivable, which is part of trade receivable now, or a contract asset, which is part of other financial asset or other asset on the balance sheet, you're not required to give any aging. The aging is restricted to trade receivable. The trade receivable aging is also from the due date of payment. It is not from the date of invoice, unless you have no ability to capture it. Due date of payment means you have given a credit period of 30 to 60 days. The aging starts at the end of that. Okay, so that is very important to understand. The aging is not expected from the date of invoice unless you have a situation that you don't have the ability to capture that data. Like say if a client is very small and there's no way to capture that data, then you do from the date of invoice and you disclose it. But the expectation of the guidance notice it is from the date of due date only, and not really the date of invoice. So I think disputed due is a judgment area. You have to exercise the judgment, and if you believe you have exercised the judgment, you want to disclose it, please disclose it. But this is what we have done it practically. Otherwise, if you go by positive evidences, we'll never get to completeness in that sense. Okay, Hivan, next slide. So there was a very popular issue that security deposit under the old Schedule 3 were required to be disclosed under loans. A lot of companies were not following that because frankly, security deposit for rental is never a loan. It is in the nature of other financial assets. The new Schedule 3 has fixed it. Then promoter shareholding is required to be disclosed. There is a bit of a debate. If the promoter holds nothing, do I need to disclose? You need to disclose the promoter name and you need to say that there is nothing. Promoters are typically how the company is defined, who the promoter community is. In a listed company, it is fairly simple. Who are defined in the SEBI press release is pretty much the promoters. So we have to get to the legal definition of the promoters and disclose even if they don't hold anything in the financial. There is a debate whether the promoter shareholding I should show for both equity and preference shares. Equity is 100%. You have to show. Preference shares, our view is that if that is equity in nature, then you have to disclose what is promoter shareholding. If the preference share is liability in nature, the requirement doesn't kick in. The guidance note is very clear that promoter shareholding should be given for all instruments which are equity in nature. If an instrument what they hold is liability in nature, like a debenture or a preference share which has a redemption right and not conversion right, so then clearly you have a situation where you have to deal with this. You don't need to disclose the shareholding of the promoter. So it is restricted to what is equity. Even if the disclosure is nil, you have to call it out. I think that is one of the important questions which I wanted to address. The additional disclosure is required on statement of changes in equity. A lot of us know what it is. It is basically you have 4 or 5 statements. One is balance sheet, one is statement of profit and loss, and then you have changes in equity and you have cash flows, and then you have the notes to accounts. Changes in equity, they have actually brought a format, and that format has to be followed for the purpose of share capital, where they brought out whether there is any change in share capital due to an error or a restated balance. So you'll have to, mostly it is a nil kind of a thing, but you have to bring it out. The other thing with the changes in equity is that retirement benefit, like gratuity, where you have certain remeasurements happening, which we show as part of other comprehensive income. In the new statement of changes in equity, you are allowed to present it as part of retained earnings, but you have to disclose that as part of the books. A lot of companies are presenting it as part of retained earnings. They don't want to have a other comprehensive income line for remeasurement of defined benefit plans, which is gratuity and PF at times. Everybody is showing it as part of retained earnings and putting a note to that effect that the remeasurement benefits have been recorded in the retained earnings. What are remeasurement benefits? Basically, actuarial gain or loss. Whenever it is actualized, you're familiar with that. It is part of the actuarial valuation report. I think this is a very interesting disclosure, which the company has the onus now. Where the company not use the borrowings from banks and FIs for the specified purpose, it has taken to the balance sheet day. The company should disclose the details where they have been used. So basically, in a way, you're trying to bring the loan covenant compliance into the balance sheet. That if you took a particular loan for a specified purpose and you have not followed that, you have to bring it out in the financials that you have not followed it and what have you done with that money. And this is typically to do with all the companies which take a lot of loan and really don't keep the discipline of where they've used it. to bring it out in the financials. The Schedule 3 covers all loans. Caro is restricted to term loans in this area. And absolutely, it is an overall disclosure. So you will have to focus on the overall thing only. Then the other big change which they have brought is if there is a current maturity of lease obligation, how do you show it non-current and current finance lease liabilities? So this particular liability, non-current and current financial liabilities. So they have brought it as part of the financial liability definition. A lot of companies are showing lease liabilities as a separate line item itself on the balance sheet. And I think that is the right thing to do. Current maturity for long-term borrowing is now part of borrowing and not other financial liability. To give a big picture of the correct picture of the borrowings. If somebody wants to know what is the total borrowing, you just have to take non-current and current borrowing and add it. Earlier you have to take non-current borrowing and you have to carve out the current borrowing from the other financial liability or other liability, which is not needed anymore because that is the requirement now. Now, this is a very interesting kind of obligation which has come, which is called the funding obligation. The funding obligation is where you are transferring the money to the subsidiary in whichever form, with an understanding that the subsidiary will pay to somebody else and the ultimate beneficiary is somebody else of that money, where you are the originator. So mind you, this is not Caro. This is a Schedule 3 requirement as well as Caro, as well as the main audit report, sorry, not Caro. So Schedule 3 requirement of financial, and you are actually making a positive assertion as auditor in the main audit report. So the obligation is pretty huge. And that is why it's very important that we get the management also to disclose in the financials that they're compliant with this requirement. So what the requirement is, it is largely linked with the fund flow. One is where the company is the originator. I pay to the subsidiary and pay to somebody with an understanding it should be paid to somebody else. Okay, that is a requirement to disclose. Or I am an intermediary where I receive money in whichever form, whether it's equity, share capital, or any other source, with an understanding that I will actually pay to somebody else. So one is where I am the originator. The second is where I am the intermediary. Both situations require disclosure here. Now, typically, this clause was brought in to address siphoning of funds because a lot of companies were actually moving the money out of the company into promoter related parties or connected enterprises. Okay. So the whole idea of this was, and this was very common in the real estate community and even the financial services community. Okay. Which is why this clause has been brought in and you have to deal with this. Okay. The third assertion you have to make is based on whatever work you have done as auditor, you have not come across anything. So one is the positive assertion on where you are the originator. The second is intermediary as a company. And the third is as auditor, actually you have not come across any evidence to the contrary. So it is a pretty onerous kind of a clause. Now, what is very important for you to note is this clause doesn't make a distinction that if I have paid it to wholly owned subsidiary. So for example, a lot of companies give money to wholly owned subsidiary to acquire another company. This clause requires disclosure even in those situations. That you actually paid to the subsidiary who has used it for the purpose of acquisition of another company. Strictly by the spirit of the law, that was not required because that's not siphoning, not moving out of the company. You are acquiring a company and you are actually going to consolidate. But this clause actually tells you to disclose those kind of transactions also. Now, which is very interesting and which is very sometimes not the most logical way of presentation, but it is a requirement to actually disclose those transactions also. Now, this is an area where you need very strong representations, very strong study of the board minutes, very strong study of the risk management committee minutes, because that is where the approval of these transactions happen. If anyway these are not approved, you have a big non-compliant standing and staring at you. But you have to really comb through all these minutes and be very careful about the whole fund flow and disclose this. Make sure the company discloses this and you cover as part of your audit report obligation also. And believe me, it is the main audit report, it's not Caro. So the obligation is pretty tremendous and pretty huge. So the intent of law is different, but disclosure is a little bit more in that sense. And there is a specified format on how you need to disclose all of that. So I'm not getting into that, but that's pretty straightforward. I just wanted to explain you the logic around this. Then there is a lot of disclosure when you obtain borrowings which are secured by current asset. This clause doesn't cover borrowings which are unsecured. This clause doesn't cover borrowings which are secured on property, plant, and equipment. This clause only covers where you have current assets. So you have to do a number of disclosures, whether the quarterly returns are in agreement with the books of account and whether they have done a timely filing of return or not. Okay. Now there's a huge diversity in this area. Okay, and the diversity in this area is because they file the quarterly returns. The company says how I define current asset is different from how the bank defines it. How I define current liability is very different from how bank defines it. How I look at lease liability is very different from how bank looks at it. You know, all this kind of interpretation plays there in the quarterly return. At the start, you should know that the quarterly returns has to reconcile with the books of account and should be consistent with Schedule 3 classification. If you find any interpretation by the company which is outside of Schedule 3 on how they have defined the current asset or current liability or whichever way, you need to make sure that it is well covered in the agreement, loan agreement with the bank. If it is not covered in the loan agreement, the only practical way to deal with this is you get a very clear interpretation over email from the bankers themselves. And this is an area which you should be very careful, because this is an obligation cast on the company and the auditor that the quarterly returns which the company filed were actually reconciling with the books of account. Now the Caro requirement is actually only for working capitals above 5 crores, but for a financial statement there is no limit mentioned. Even if it is below 5 crores, you have to disclose it as part of the disclosures in the financial statements. So I think this is one important change. One area where I feel often people struggling because of the interpretation play, but it's fairly simple as long as you are transparent on how the interpretation has happened. And if you have a situation where the company says, I have followed this interpretation and this is how the banks have accepted it, you need to probably bring it out in the disclosures to cover yourself well. If the quarterly returns have been filed, whether I need to cite a stamped copy only to make sure that the quarterly returns are filed, frankly, those are matter of evidence, which you need to make a judgment. The guidance note doesn't say you have to look at the stamped copy only. As long as you can cite the email or you can cite whatever as an evidence to say that they have done it, I think we should be okay in that sense. Okay. Trade payables. Trade payables is also like trade receivable. You have a situation of trade payable aging also. Again, the trade payable aging is driven by due date of payment, not driven by date of invoice. But again, if you don't have relevant information, it is from the date of invoice or the transaction date, whatever you can figure out. Accrued expenses, which are not turning into invoices, you're not required to give any aging per se. You can actually put it as an overall kind of number and reconcile to the overall financials. The other important thing is you could have a situation, again, disputed use. As I explained in trade receivable, same method should be followed. We should follow what is in the legal proceeding or going to get into legal proceeding. If there is a difference in the confirmation between balances, be vigilant. That is a fact, that is an input. But if it is only because of reconciling differences, they don't become disputed due. If you believe that those are not only because of reconciling differences, they are in the nature of disputed due, and disclosure would be encouraged. There is a lot of debate on MSME, how guidance note defines it, how the act defines it, because frankly, medium is not covered in the act, whereas the guidance note talks about it. Our suggestion is follow the act, because act prevails over everything. So whatever is the requirement as per the act is what you should disclose. And in terms of the audit evidence, What is MSME enterprises? How do you evidence it? Frankly, MSME enterprises is driven by what is self-declaration by each of the MSME or each of the vendor. There is no other way to capture it. So whatever is the self-declaration, the company should have the mechanism to capture it, and that will be the basis of your disclosure in the financial statements. And self-declaration not by the company, self-declaration by the vendor. That's very important for you to know. Okay. Struck off companies, I think it's fairly straightforward. There are very clear disclosures for transactions with the struck off companies. Whether your balance outstanding is zero, whether the transaction is zero in the current year, but you have a balance outstanding, whatever combination you can think of, the disclosure is required. The real challenge is to get a complete list of struck off companies and the company able to identify which are the companies which are actually struck off and they have a dealing with them. Okay, so the identification is more important. No kind of combination will take you away from disclosure. If the company says my outstanding balance is zero, but there was a transaction, they have to give. Company says not material transaction, not relevant. Company says I don't have a transaction, but the balance belongs to previous year, they still have to disclose. So no amount of escape route is available. No materiality interplay is available. You will have to disclose it because that is the intent of the guidance. Completeness of information is a challenge, but that is more of an auditing challenge. But largely it is simple as long as you have the list of struck off companies, which is available in MCA website, and you actually do some procedures, get the client to do some procedures around it, and they should be able to identify. Yeah. From profit and loss, there is a requirement to disclose if there is an undisclosed income in the income tax return. There is a requirement to not disclose in Schedule. There is a requirement in Caro.
Amit, your voice is trailing off.
Is it better?
No. It's still trailing off a bit.
The voice is not clear.
Is it not clear? Was it not clear earlier now, or it happened?
No, just now.
Is it better now, even?
Better.
I took off the video, so maybe the connectivity is a challenge. So let
Yeah.
me know if it trails again.
Yeah.
Okay, so undisclosed income, you will have to bring it out as a disclosure in the financials and even in Caro. There is a popular question: if there is an undisclosed income in income tax return, does it lead to any restatement of financial statements? It could lead to restatement. But restatement only happens if you have a situation of material misstatement. So you will have to make an assessment based on the specific facts and circumstance at your client, and then take a view whether it was a material misstatement or not for you to restate. And restatement concept is only for the purpose of Ind AS financials. Otherwise, the prior period concept was there in the old Indian GAAP. Cryptocurrency is whatever you're dealing in cryptocurrency, is what is the requirement in the Schedule 3 disclosure. If there is no dealing, you don't have to say that there is no dealing in cryptocurrency. You don't have to make a positive assertion in financial. It is only reporting by exceptions. Okay. CSR is a fairly simple disclosure. This disclosure only applies to standalone financials. Doesn't apply to consolidated financials, where you bring out the whole disclosure. What was your expenditure, shortfall, total, nature of CSR activity. It's a fairly straightforward disclosure. No judgment here beyond a point.
Thanks, Amit.
Yeah, so I'll let my colleague Hemant now. Hemant, you will take up from here, right?
Yes, Amit.
Okay.
Thanks, Amit. So moving on, the first one is with respect to compliance with the number of layers of companies. Companies Act requires investments in companies to have not more than 2 layers of subsidiaries. There are certain exceptions to this rule, such as investments in overseas subsidiaries or banks and NBFCs, etc. If an Indian company has investments in an Indian subsidiary beyond 2 layers, the financial statements should carry disclosures in relation to the name of such subsidiary, the corporate identification number, and the nature of relationship or the extent of holding in such downstream companies by the holding company. In terms of willful defaulters, this is a term that should be identified based on the RBI guidelines. Identification of a willful defaulter is restricted to the year under audit and actually extends up to the date of the audit report. So as auditors, we should be careful and cognizant of the subsequent events that are occurring up to the date of the audit report. The disclosures in the financial statement should include the date on which the company or any of its subsidiaries, for the purposes of consolidated financial statements, were disclosed as a willful defaulter, the amount and the nature of defaults during the year as well. In terms of analytical ratios, Schedule 3 prescribes about 11 analytical ratios in total that are required to be disclosed in the standalone financial statements. These disclosures are not really required in the consolidated financial statements. The ICI guidance note also recommends the numerator and the denominator that could be used to compute these analytical ratios. It is important to ensure that the financial statements describe the numerator and the denominator the company is using to compute the ratios, and appropriately carry explanations for changes more than 25% when compared with the previous year. It is also important to ensure that the amount used to compute the ratios reconcile directly with both the financial statements and the other information accompanying the financial statements. With respect to schemes of arrangements, if they have been approved by competent authorities during the year, companies should carry disclosures in the financial statements to confirm if the accounting followed is both in accordance with the scheme approved by the competent authority as well as the relevant accounting standards. If there are any deviations from the same, they should be appropriately explained. Now, there is a common practice for the scheme to not necessarily be in compliance with the accounting standards. In those cases, the scheme will override the accounting standards and the accounting should be in accordance with the scheme. But it's important that in these cases, the financial statements carry disclosures to the effect that the scheme is not in compliance with the accounting standards and the reasons for the same. Now, within 30 days of a charge being created on any of the company's assets, companies are required to file the respective forms with the ROC. If the charges have not been filed within such statutory period, details of the charges made and the reasons for delays in filing should be explained appropriately in the financial statements. Lastly, from a Schedule 3 perspective, with respect to rounding off, if the total income is less than 100 crore rupees, then the amounts can be rounded off to the nearest hundreds, thousands, lakhs, or millions, or presented in 2 decimals. If the total income is more than 100 crore rupees, amounts can be rounded off to the nearest lakhs or millions of crores, or presented in 2 decimals. Moving on to Caro, the first one is with respect to paragraph 3 of Caro. There are actually 6 sub-clauses under this clause that we as auditors need to report on. Reporting under 3A is applicable to all companies except those whose principal activity is to give loans. Reporting under this clause is restricted to transactions during the year only. So transactions during the previous year or subsequent to the year are not required to be considered for reporting under this clause. And as far as loans, advances in the nature of loans, guarantees given, securities given, auditors are required to report on the aggregate amounts granted during the year or invested during the year, as well as the amounts outstanding as of the balance sheet date. Now, one of the critical things that we need to be conscious of here is what is an advance in the nature of a loan. It really depends on the specific facts and circumstances of the particular case, and quite often involves judgment. So for example, if you have given a trade advance to a vendor, which normally you would give, let's say 10 or 15%, but if you've given 50% upfront for a commodity that needs to be delivered 1 year down the lane, it's clearly not in compliance with the past practice and the nature of the business the company is doing. So this may indicate that the advance given is really in the nature of a loan and attract reporting under this particular subclause. And the reporting that is required to be given under this clause is actually for 2 subgroups. The first one is with respect to associates, joint ventures, and subsidiaries, which are reported as one group separately for each of these subcategories, and for all other parties separately as one group. And loans for the purpose of this clause could mean both short-term and long-term, and either in cash or in kind. Key thing to note is, for the purposes of this subclause, guarantees are restricted to financial guarantees only. So other kind of, standby guarantees are not required to be reported on as far as this clause is concerned. Moving on to the next one, under subclause B, whilst previously the reporting was restricted to loans only, auditors are now required to report on investments made, guarantees given, securities given, loans given, and advances in the nature of loans as well. Reporting under 3B is actually applicable to all companies. Unlike 3A, even those companies whose principal activity is to give loans will be covered by the reporting obligations under 3B. And similar to 3A, reporting obligations under this clause is covered to transactions during the year. As auditors, we should obtain a very clear understanding of the terms and conditions under which each of these transactions were entered into and evaluate whether or not these are prejudicial to the interests of the company. Specifically with respect to related party transactions, we think auditors should assess if the terms and conditions of the transactions are at arm's length or not, and appropriately report under this subclause. Under 3C, no real material change when compared to the earlier Caro, except that reporting under this clause covers both loans and advances in the nature of loans, as is the larger paragraph 3 of Caro. Reporting under 3D is same as it was done previously. The important thing to note here is transactions during the year, as well as those during the previous years, will need to be considered for reporting both under clauses C and D. Clause E is a new reporting requirement and practically pertains to evergreening of loans. The reporting under this clause is applicable to all companies, except whose principal activity is to give loans. So the expectation is that auditors are required to report on transactions where loans or advances in the nature of loans, which were due for settlement or maturity during the year, were either renewed or extended, or fresh loans were granted to renew the overdue loans. So the regulatory authorities are, trying to identify transactions of this kind of a nature, where the financial health of the, underlying companies to whom these loans have been given are not really good. This is a new clause, and the objective of this clause is for us to report on whether or not short-term funds have been utilized for long-term purposes. So in one form, it is trying to assess the financial health of the company actually. As concerned, current maturities of long-term borrowing should be considered as long-term funds and not as short-term funds. Quite often, considering the fungible nature of cash, a one-to-one mapping of the sources of funds and the utilization may not really be feasible. As auditors, we should look at the overall financial statements, the current ratios, and the cash flow statements to determine on an overall basis if the short-term funds have been used for long-term purposes. Moving on to the next clause, under 9E, auditors are required to report if the company has obtained funds from any person to meet the obligations of its subsidiaries, associates, or joint ventures. Now, obligations for the purpose of this clause could mean either loans or trade payables or any other nature of liabilities that need to be discharged by subsidiaries, associates, or joint ventures. And the funds may actually be obtained from any source, whether it's banks or financial institutions or from any other parties, and maybe either long-term or short-term in nature. Any kind of a combination of these sorts will attract reporting under this clause. Again, similar to the previous one, a one-to-one mapping of the source of the funds and the utilization, it may not be practically feasible. So again, auditors should look at the overall financial statements, the cash flow generated from operating activities, the cash flows given really to subsidiaries, associates, and joint ventures, and assess if any of the funds that have been taken by the company have really been taken with the purpose of meeting the obligations of the subsidiaries, associates, or joint ventures. Under this clause, we are required to report on whether or not cash losses were incurred during the current or the previous year. Even if cash losses were incurred during the previous year but not during the current year, we are required to report under this clause. Now, it is important to understand cash losses are not the same as realized profits or distributable profit. These are different terminologies. As auditors, we should start with profits or losses after taxes as reported in the financial statements and add back non-cash items such as depreciation or amortization of fair value changes. It's important to also note if there are realized profits or losses which have been recorded in OCI and not reclassed to the P&L because the underlying transactions have not matured, they should also be considered while determining whether or not the company has incurred cash losses during the current or the previous financial year. Under clause 19, we are required to assess various factors such as financial ratios, expected realization of financial assets, other information accompanying the financial statements, minutes of the meeting of the board and the committees thereof, and really conclude if there is a material uncertainty of the company meeting its liabilities as the balance sheet date, as and when they fall due within the next 12 months. Now, it's very important to consider two things. One is the liability should exist as of the balance sheet date, and two, they should fall due within 12 months from the balance sheet date. Only these transactions are required to be considered by us as auditors while forming an opinion as far as this clause is concerned. Now, even though the going concern assumption may be appropriate in the main body audit report, let's say because a support letter has been received from the parent company, we as auditors should evaluate the ability of the holding company to really support the subsidiaries' liabilities as and when they fall due. And more importantly, the fact that a support letter has been obtained from the parent company together with the financial position of the subsidiary itself should be explained well in the Caro report. Now, under this clause in relation to fraud reporting, the reporting obligations have actually been widened. Previously, this was restricted to frauds committed on the company by its officers or employees. Now, all frauds committed against the company, irrespective of whether it's by officers or employees or vendors, will actually need to be covered for reporting under this clause. Also, if the auditors have filed a report concerning fraud in Form 884, that fact will also need to be reported under the subclause. In relation to whistleblower complaint, now there's a new obligation that has come under Caro-2020. We as auditors are required to report on whether or not we have considered the whistleblower complaints as part of performing the audit and reaching our conclusions. Now, the reporting obligations under this clause are restricted to complaints received during the year only. As we all know, not all companies under the Act are required to establish a whistleblower mechanism. All listed companies are mandated to have a whistleblower mechanism. As far as private companies and public unlisted companies are concerned, there are certain criteria and turnover criteria which are required to be fulfilled for a whistleblower mechanism to really be established. Now, even if a company has established a whistleblower mechanism voluntarily, so for example, if you're doing the audit of an Indian subsidiary whose parent company is, let's say, listed in the US or the UK, now these companies under the regulations of their home country may be required to establish a vigil mechanism or a whistleblower mechanism for the entire group, which covers the Indian subsidiary as well. Now, in these cases, it is important for us as auditors of the Indian subsidiary to get hold of the whistleblower complaints as far as the subsidiary is concerned. Now, clause 14 pertains to internal audit. All listed companies in India and certain, again, private and public unlisted companies that meet certain criteria are required to mandatorily establish an internal audit system. Now, assessing whether or not the internal audit system is commensurate with the size and nature of the company really involves judgment and consideration of various factors such as the nature and size of the business, the operating locations and the geographies where it's based out of, the effectiveness of the control environment, both the manual and the IT automated controls, and the nature of the controls. Are they really centralized in a shared service center or decentralized across various locations? As auditors, we should also assess the extent of the involvement of the board and the audit committee, or board or the audit committee, in determining the scope of the internal audit function and the regularity with which they meet with the internal auditors and take feedback on the nature of the internal audit observations that they have been identified. Under subclause B, we are required to report if the internal audit reports have been considered by us as statutory auditors in performing the audit. we are required to particularly assess the nature of the internal audit observations which have an impact on the financial statements or the control environment. It's important to ensure that while assessing the nature of the internal audit observations, we evaluate the impact of these observations as far as control deficiencies are concerned and the consequent impact as far as our report on the internal financial controls is concerned. And clause 21 is only applicable while reporting on the consolidated financial statements. As auditors of the parent company, we are required to comment upon whether or not there are any qualifications or adverse remarks in the Caro reports of the Indian subsidiary companies. If there are any such comments, the parent company auditor should identify the name of the company and the relevant paragraph in the Caro report of the subsidiary where there is either a qualification of or an adverse remark. The important thing to note is the parent company auditor is, while reporting under this clause, is not required to reevaluate from a materiality standpoint all the qualifications or adverse remarks made by the auditors of the subsidiary companies are required to be reported as is. Now, one of the practical challenges is while reporting on the consolidated financial statements of the parent company, the Caro reports of the subsidiaries may not be available. Now, what do we do in such a case, right? We are required to really report the names of the subsidiary companies whose audit report is not available on the date of the consolidated audit report being issued. And we just need to state this particular fact pattern. There are no further obligations as far as we are concerned. Now, these are all of the matters that we thought are important to highlight to you from a Schedule 3 and from a Caro standpoint. Most of the questions that were raised, we've tried to answer it as and when we've spoken on each of these points. So if there are any follow-on questions, we're more than happy to take them.
Hemant, we can take off the presentation.
Yeah.
I think there was one question in the chat box.
Pramod? There is one question in chat box. What about if name of the company is changed? Whether this, if in the title deed the old name is prevailing and the name of the company is changed, how to report that?
So this question is, I mean, in those situations, I don't think you just have to say at the overall level that the name of the company has changed and the company is in the process of doing it. There's no further disclosure required. I think we have to just bring out the statement of fact in that.
Yeah.
Because anything else will be not the intent of the clause, really.
Yes. Second question is guarantee given to financial institutions in favor of a group company in which the company is not directly or indirectly has any shareholding without charging any fees. Shall it be considered as prejudicial to the interest of the company?
So normally when a company gives guarantee to a related party, there is a requirement for a guarantee commission to actually be levied. Now, this guarantee commission is not being levied. I think practically what we normally see is these guarantee commissions are never really material, even if they were to be levied. But as auditors, we would be required to sort of do that computation to see on an arm's length basis what would the amount of that guarantee commission be, and appropriately conclude whether or not it is prejudicial to the interest of the company.
विष्णु तुम्हारा हो गया क्वेश्चन हो गया क्या?
हम तुमको देख खोज रहा है, तुम हमसे
नहीं मैं यही हूँ
तो क्वेश्चन करो तुम फिर.
नहीं क्वेश्चन तुम्हारे पास में चैट बॉक्स में और कुछ है क्या?
ना चैट बॉक्स में और कुछ नहीं है.
So taking one point जो I wanted to clarify, and this is the classic case where we have to be careful. If there is a guarantee given for anything which is outside the group, which is not getting consolidated, you have to be careful on what the commercial substance of that transaction is, because typically that could be attracted by the fund flow or the main audit report kind of implication. We just need to think through that, and whether it is prejudicial to the interest of the company or not is something which is a matter of fact which we need to just think through, depending on the amount of the guarantee involved in materiality. But typically, it is always better to disclose in those situations that it is prejudicial because these will be big guarantees. But before we get to the answer of what the disclosure in Caro is, which is a simpler thing, I think the most important thing is why have you done it? Why would somebody guarantee the loan of a company which is not even part of the consolidated group? So those are the things we need to get over, because that could create more issues on the substance of the transaction.
Now we are inviting questions from the floor and request all the participants to have some queries.
Mundra ji, can I ask a question?
Sure, why not?
Yes. Thank you, sir, for answering both my questions. I am Apur Maheshwari. The questions were raised by me only, sir. Sir, I would just like to also ask one more question. This is particularly related to NBFC. So, sir, many a times it happens that there are many companies which are not NBFC. They have idle funds. So they may be having a land or something. They are having idle funds and they have invested their money in mutual funds or something. So what's happening, sir, in both the clauses of income clause and the asset clause, the 50-50 clause, the company is technically having 50% of financial income more from financial assets and is also having financial assets also more than 50%. Now, sir, in clause number 16B, where it's stated whether the company has conducted any non-banking financial or housing financial activities without a valid certificate of registration. Are we supposed to report anything out there in such a case?
Purva, thank you for the question. This is a very popular issue, right? It's a very common issue where the 50% of the balance sheet's financial asset could be liquid assets, and the 50% could be the non-financial income, right? Which is why the NBFC law triggers, right? But the company has not been formed for an NBFC purpose. The purpose of the company was different. Now, this is becoming a very tricky issue because the RBI is involved. And wherever RBI is involved, we should not take any chance. So the way we should tell the company and advise them that you should go to RBI and get a waiver. And RBI is giving waiver, okay? And RBI is giving waiver when the companies themselves are going. The moment you go with a consultant, they make it more complicated. But when the companies actually go and say, sir, this is my intent and this is not what I wanted to do, they're giving waivers, okay? If they do not give waivers, and if you do not have RBI waiver, then you have to consider it as an NBFC and decide your reporting implication, okay? In some companies, we have gone ahead and qualified also in these situations. That, okay, this is an NBFC, not followed, not registered with RBI, no waiver done, and we have qualified because we don't know what the implication is, really. And it's not only a Caro reporting, actually it becomes a main audit report challenge, okay? And which is where we would always pause and think. Only in situations where we are doing an interim financial and statutory year is still 9 months away or 10 months away, we've taken certain lenient view of QM, but we actually qualify in these matters. Okay, but again, it will be driven by your company, your firm's policy, your individual thinking on this, whether legal opinion is sufficient in this situation. I can tell you, every lawyer will give you opinion and NBFC is not triggered. And I can tell you, RBI has pulled up many companies in this situation. Okay, so we have to be very careful. And this is RBI. Okay, so I don't know whether I've answered all aspects of your question, but I just wanted to give you a different flavor on how to approach this matter.
Thank you, sir. And sir, also regarding
Evan, please feel free to add if you have any additional thoughts.
Sure.
Also, sir, regarding the name change that you have mentioned, that we so do we need to mention it finally in a Caro report or not? The title
It's very
deed, sir.
simple. Name change, anyway, you have to say everywhere in the audit report.
Everywhere.
Name formally known as. And you just have to bring out it as a fact in the Caro. Better to state as a fact. Right?
Better to state it.
Yeah.
Okay.
See, Caro is like a checklist. It's not an opinion.
Right.
Caro is a checklist where only yes and no is the answer. There's no maybe. The question is a title deed in the name of the company, answer is no. Okay. So if it is no, why it is no? in your situation is only because of the change of name of the company, which is not the intent to bring out. So you say that. Main audit report is an opinion where you have
Okay.
some judgment play. You don't have a judgment play in Caro. It is always yes and no.
Okay.
Sorry, I am unmute.
Pramod,
Sorry, I will unmute.
hello.
Yeah, sir, I will ask to raise some queries. I think most of the queries which I had sent to you, I think has been addressed, but still I would like to nail a bit further. First thing is with relation to shareholding, where the preference shares, where you said in the nature of equity has to be disclosed. Now, optionally convertible preference shares, whether this will be treated as equity in nature or what?
I was not planning to cover the equity and liability classification, Pramodji, but since you have raised that question, generally instruments which do not have redemptions could get into equity classification, whether it is optionally convertible or remains as a preference share.
But
only when there are redemption rights, it can get into liability classification, or the conversion is at other than fair value. Okay, but I just thought what is very important is whether preference share is equity or liability as per Ind AS. We have to determine that first. In majority of cases, optionally convertible could get there because they don't have redemption rights. Okay, and if that gets to equity classification, you have to disclose it by classes of the class of shares. So you will say equity shares, this much promoter holding, preference shares, this much promoter holding. That's how it will work.
optionally convertible should be treated as equity.
Should be nahi bolunga main. You have to read all the other relevant terms and conditions. Generally, it gets into equity classification.
Thank you. So another thing is you said that current maturity of the long-term borrowings are to be shown under secured under current short-term borrowings. It has to be credited. So whether we have to say whether it is since these are covered, these are the secured. Should we say these are the secured or unsecured? Should we say these are secured? क्योंकि जब हम क्लासिफिकेशन करते हैं तो शॉर्ट टर्म बोरिंग सिक्योर्ड अनसिक्योर्ड should it come under secured?
So it all depends. Generally, long-term borrowings are secured. So we will call it. It's a statement of fact, Pramodji. कोई judgment नहीं है इधर.
नहीं जजमेंट नहीं है, लेकिन हम जब शेड्यूल बनाते हैं शॉर्ट टर्म बोरिंग का तो वहां पर देते हैं ना कि कुछ क्या क्या सिक्योर्ड है क्या अनसिक्योर्ड.
Yeah, you will have to give secured or unsecured whatever it is.
तो I have to give it under secured. You have to give under secured and then down. उसमें लिखना पड़ेगा. क्योंकि पहले हम लोग जब करंट लायबिलिटीज में लिखते थे वहां पर कुछ लिखा नहीं जाता था. वहां पर सिर्फ लिखा जाता है. यहाँ लिखना पड़ेगा.
प्रमोद, इसमें मेरा एक क्वेश्चन और है, जो नेचर ऑफ सिक्योरिटी जो है, whether we have to mention in both under long term and short term borrowing or at one place, the nature of security.
You can do at one place, Vishnu, because इसमें कुछ
cross reference.
Yeah, it is just have to cross.
सर एक था बाद में जो मेरा ट्रेड पेबल्स के अंदर में this requires the total outstandings due to micro enterprises and small enterprises. लेकिन जब नीचे एजिंग शेड्यूल देखते हैं वहां पर एमएसएमई लिखा हुआ है. इट मींस इट कवर्स ऑल माइक्रो स्मॉल एंड मीडियम एंटरप्राइजेस. तो आई थिंक act should prevail here na.
That's what I clarified, Pramodji.
You clarified me over home.
Act should prevail.
Another one thing, sir, यहाँ पर identification of MSME is a big challenge. क्योंकि आज के दिन छोटी कंपनियों बहुत सी कंपनियों में they do not communicate with the creditors. और उसके बाद जो सप्लायर्स होते हैं वो भी पूरी इंफॉर्मेशन नहीं देते हैं. Then in under such circumstances, मतलब what should be the reliance, because this is a very tricky question. In the sense कि it is a practical thing, especially in the small and medium enterprises के अंदर में यहाँ पर वो communicate ही नहीं करते. Do not even know what is the impact of the MSME provisions if the liability is not paid within 45 days and they have the reporting requirement under MCA. तो ये बड़ा challenge होता है. तो इसमें कैसे
ये challenge है. The only practical way is So we actually इसका और कोई audit step possible भी नहीं है. So the only thing is declaration जो आता है company से, you only rely on that. If they have not declared their MSME, you can't do much about it.
You can't do much.
No.
But then should we go through and verify the procedure which is adopted by the company?
Go
Like if the companies are sending their confirmations to them or they are sending the mails to them, I think that should be,
That is important.
that is important. But if the company is not doing anything, should we qualify?
I have not seen qualification in this area.
You have not seen any
No,
qualification.
I have not seen. Generally, in public domain, you will not find any qualification in this area. You will have to make sure the company is doing enough that there is a declaration, and you just make sure that you take an appropriate representation in this area.
Appropriate representation.
सुमानी जी, इसमें मेरा एक छोटा सा कंसर्न ये था कि जो साइज का ऑडिट हम लोग करते हैं उसमें जो आज के दिन एमएसएमई का जो डेफिनेशन है, मोस्ट ऑफ द सप्लायर्स जो है वो एमएसएमई में आ जाते हैं, लेकिन हमारे क्लाइंट्स जो है वो तो आइडेंटिफाई ही नहीं करते हैं कि एमएसएमई क्या है. तो उस केस में क्या करें? हमारी तो रिस्पांसिबिलिटी बनती है.
अगर समझ लीजिए बहुत छोटी कंपनी है और आपका वेंडर प्रोफाइल ऑफ द कंपनी सर्च की जाए एमएसएमई कि एंड ऑफ द डे विष्णु जी इसका क्या है कि इट विल बी ड्रिवन बाय क्या प्रोसेस है कंपनी का. If the company has done all the right things and vendor is not declared, I don't think you need to qualify. Okay. If the company has themselves not done the right thing in identification or taking a declaration at the time of vendor onboarding, then you could have a situation where material balances are from those parties and you have a doubt, you can think of some level of qualification. But as I said, public domain में आपको ऐसा qualification मिलना थोड़ा tough है. But again, बहुत fact driven है. I can only tell you that I have not seen it in public domain. That's the only one.
Yes, you are correct.
Sir, another matter जो आता है वो है कि trade payable disputed, trade payable undisputed. But they are trade payables which are more than 3 years. What impact it can have from the income tax perspective? क्योंकि यहाँ ट्रेड पेबल डिस्प्यूटेड अगर हम दिखा देते मोर देन 3 years तो शायद इनकम टैक्स में कुछ प्रॉब्लम हो सकती है. Reopening of the assessment.
I don't have much knowledge of Income Tax Act, but disputed you will show only if there is a legal proceeding.
Okay.
Or you have a potential legal proceeding, even if though it has not been initiated. The company plans to do a legal proceeding, so that is a disputed category. And third is if you have a confirmation where there is a permanent difference coming, and nobody is able to reconcile, could be a disputed category.
Okay.
So I think unless and until these dues are written back to the P&L because they're no longer required or anything of that sort, they're unlikely to trigger any tax compliances.
Again, sir, loan from bank and financial institutions against current assets. यहाँ पर जो दिखना पड़ता है कि whether there is the current assets की जो डिटेल दी गई है, क्वार्टरली स्टेटमेंट दिया गया, these tally with the books of accounts of the company not. Now it has been seen in many, especially in the small companies, small and medium companies, जहाँ पर उनके पास में complete information नहीं रहती है, like whether they have given their quarterly statement or not, also not very clear. But quarterly statement generally मेल पर चली जाती है, या सबमिशन किया हुआ वहाँ से कोई information ही नहीं है. इस केस में we ask we write to the banker to confirm the what quarterly statements they have been receiving they have received from the company. अब बैंक भी इसमें हमको जो है वो कंफर्म नहीं करता है. इस केस में हाउ टू रिलाई ऑन दिस फिगर, बिकॉज दिस इज वेरी वेरी प्रॉब्लम, क्योंकि हम लोग बैंकों को देते हैं, बैंक अच्छा बना देता है, कोई जवाब ही नहीं आता.
या तो बैंक तो कभी जवाब नहीं देगा.
अब बैंक जवाब नहीं दे तो हाउ टू रिलाई ऑन,
unless they have a very strong relationship with the bank. Second thing is अगर email evidence retained है तो best है. If there is no evidence retained, that could become a matter of disclosure in Caro.
इसमें तो आपको बैलेंस शीट में भी डिस्क्लोजर देना है, बैलेंस शीट में भी डिस्क्लोजर देना है. कारो के अंदर में तो 5 करोड़ की लिमिट है, यहाँ तो कोई लिमिट ही नहीं है. तो बैलेंस शीट में भी अगर डिस्क्लोजर देना और देयर इज नो सच क्रेडिटेबल एविडेंस, शुड बी राइट इन द बैलेंस शीट दैट
अभी बैलेंस शीट में एक्चुअली वो कंपनी का है, हो सकता है वो बोले कि आई विल नॉट राइट, यू नेवर नो, राइट.
then what can be our duty? We should qualify in the instances of matter. We should
See, this is an area. This is an area. See, the point is it true that you will have no evidence of what they have done in the quarterly return?
नहीं, मैं एक सिचुएशन पूछ रहा हूँ, मैं बात ये, I have not come across any such thing अभी तक में, लेकिन मैं क्वेश्चन कर रहा हूँ कि भाई कंपनियों के अंदर में सब नहीं रहता है, बिकॉज वी हैव सीन इट ना, जो 25-50 करोड़ की कंपनियां रहती हैं ना, उनको पता ही नहीं है कि क्या स्टेटमेंट दिया गया है। एक स्टेटमेंट बनकर चला गया, ये डेटा से ये स्टॉक का कितने सर्टिफाइड करेक्ट है नहीं करेक्ट है वो भी पता नहीं है।
देन आपको कारो रिपोर्टिंग कर देना चाहिए।
नहीं, कारो के अंदर में इफ कारो इज एप्लीकेबल वी विल रिपोर्ट, इफ कारो इज नॉट एप्लीकेबल देन व्हाट शुड बी डन, बिकॉज़ दिस बिकम्स अ मैटर ऑफ अगेन
नॉट एप्लीकेबल ना, लाइक 5 करोड़ का लिमिट है अगर, हाँ 5 करोड़ के नीचे में इशू
5 करोड़ से नीचे है और या समझिए कारो भी एप्लीकेबल नहीं है, दोनों
मेरे हिसाब से उस क्लॉज में स्टिल आप डाल सकते
हैं इसको, आपने ऑडिट रिपोर्ट में डाल देना चाहिए।
एकदम मेन ऑडिट रिपोर्ट में तो थोड़ा हार्श, पर एटलीस्ट आप कारो रिपोर्टिंग में बोल सकते हैं कि मोर देन 5 करोड़ नहीं है, बट लेस देन 5 करोड़ नहीं है सिचुएशन। नहीं, मैं पूछ रहा हूँ अगर कारो अगर एप्लीकेबल नहीं है तो, अगर कंपनी में कारो भी एप्लीकेबल नहीं है। अच्छा, कंपनी में कारो भी एप्लीकेबल नहीं है, हाँ, देन यू हैव टू सी वेदर इट कॉजेस एनी मटेरियल मिस्टेक। हाँ, अगर आपका लोन बहुत ज्यादा है, हाँ, इन रिलेशन टू द बैलेंस शीट एंड यू फील कि such kind of non-compliances happen, then it can become a matter of EOM or a qualification, depending on what the. But this is like very tricky. Without seeing the real facts, very difficult to say. हाँ सर, मैं इमेजिनरी फैक्ट लेकर चल रहा हूँ। But it can get to EOM and qualification. कंपनी के पास में इंफॉर्मेशन पूरी नहीं है, बात यह है कंपनी का ने जो इंफॉर्मेशन दिया है या हमारे पास में जो इंफॉर्मेशन आई है, those does not tally with the books of accounts at all. एंड ये होता है सर छोटी छोटी कंपनियों के अंदर में, जहाँ पर मैन्युफैक्चरिंग यूनिट्स रहती है वहाँ पर स्टॉक रिकॉर्ड्स को पूरा मेंटेन करके पूरा ढंग से बनाना है, रिविजन करना, ईओएम दे देना चाहिए, ईओएम दे देना चाहिए। ठीक सर।
नहीं प्रमोद, इसमें एक इशू और है, जैसे बहुत सारे लोग आजकल क्या कर रहे हैं कि मार्च का नहीं दे करके कोई क्वार्टरली स्टेटमेंट देगा तो मार्च का नहीं देके फरवरी का कर दे रहे हैं, तो उस केस में क्या पोजीशन रहेगा? कि
मैं सारे सिचुएशन कवर नहीं कर पाऊंगा, बट इफ यू फील कि हाँ आपका ये रिक्वायरमेंट था कंपनी का एंड यू डोंट हैव इनफ एविडेंस दैट दे हैव मेट द रिक्वायरमेंट और कारो भी एप्लीकेबल नहीं है, तो आप ईओएम बना दीजिए। ठीक बात है।
अच्छा, क्वार्टरली का मतलब इसमें क्वार्टरली हो गया, मतलब
नहीं लोग कर रहे हैं
जून एंड सितंबर एंड, तो अगर कोई कंपनी अगर अगस्त का क्वार्टरली समझ के देती है तो मेरे ख्याल से गलत है, वो
गलत है। हाँ वो बात सही है, मतलब ऐसा सिनेरियो हो रहा है।
सर एक क्वेश्चन और हमारा प्रॉपर्टी प्लांट एंड इक्विपमेंट के ऊपर में, नाउ शेड्यूल 3 रिक्वायर्स लैंड एंड बिल्डिंग टू बी सोल्ड सेपरेटली, लेकिन बहुत बार क्या होता है कि लैंड की वैल्यू और बिल्डिंग की वैल्यू, लेकिन कई बार क्या है कि लैंड एंड बिल्डिंग एक साथ में परचेज की हुई है एंड परचेज डीड के अंदर में द कॉस्ट ऑफ लैंड इज नॉट स्टेटेड सेपरेटली।
इसके अंदर ना प्रमोद जी, द ओनली प्रैक्टिकल सॉल्यूशन इज कोई वैल्यूअर से वैल्यू कराना पड़ेगा दोनों का,
वैल्यूअर करा लेना चाहिए
एंड देन रिकॉर्ड करना पड़ेगा, बिकॉज़ लैंड की डेप्रिसिएशन अलग है, बिल्डिंग की अलग है। हां, डेप्रिसिएशन होती ही नहीं लैंड में और बिल्डिंग में।
और बहुत बार जो आप डीड के अंदर में खाली लैंड बिल्डिंग लिखा है, ऑल दैट लैंड सच एंड सच, ऑल दैट बिल्डिंग कंप्राइजेज ऑन द लैंड एरिया सच एंड सच, उसी करके आते हैं, तो उसमें बिल्डिंग करके दिखाया हुआ तो कोई दिक्कत नहीं, फिर इसमें भी करा लेना चाहिए।
ये कराना चाहिए, ब्रेक करना चाहिए,
लेकिन अगर पुराने से चला आ रहा लैंड बिल्डिंग एक साथ में तब।
मुंदा जी, there are some questions in the chat box.
हाँ मैं ले लेता हूँ। मैं
तो पुराना है थोड़ा, I don't know how to comment on that प्रमोद जी, क्योंकि पुराना भी है तो वो तो गलत ही है।
पुराना भी है, गलत है, ठीक है, गलत चला आ रहा था, लेकिन अब क्या कर रहे हैं, बात ये है ना,
तो डिपेंड करता है, समझ लीजिए कि बिल्डिंग को बहुत, अब जो बिल्डिंग, अच्छा आप पूरा बिल्डिंग ही डेप्रिशिएट करते हुए आ रहे हैं, देखो बहुत पुराना चले आ रहे हैं ना, तो इसको फिर छेड़िए मत,
छेड़ना नहीं चाहिए इसको। हाँ नहीं, इसको नहीं छेड़ना चाहिए, अनडाउटेडली देयर इज नो पॉइंट इन, लेकिन करंट ईयर में कुछ वैसा होता तो वी शुड हैव दिस थिंग,
यू डील विद इट, गो फॉरवर्ड। ये जो बहुत पुराना है आप कुछ कर नहीं पाओगे, क्लाइंट भी नहीं बनेगा।
सर एडिशन और डिलीशन फॉर प्रीवियस ईयर, शुड इट बी गिवन फॉर ईच क्लास ऑफ एसेट्स और इट हैज टू बी कंसोलिडेटेड फिगर जो पहले चला आ रहा था,
ईच क्लास ऑफ एसेट,
तो ईच एंड एवरी एसेट्स के नीचे में जो प्रीवियस फिगर देना पड़ेगा। ओके, थैंक यू सर। इट वाज क्योंकि इट वाज मुझे भी थोड़ा कंफ्यूजन लग रहा था, तो मैंने स्पेशली क्वेश्चन किया था. Again, sir, as per Schedule 3, if there are numerous numbers of title deeds and original deeds are lying with the banker, और हमें वो नहीं मिल पा रही है, उस केस में हम कैसे करें?
अच्छा, सारी ओरिजिनल डीड बैंकर्स के पास है.
हाँ, सपोज के सारी की सारी या मोस्ट ऑफ द टाइटल
तो
डीड्स
आपको ट्रांसपेरेंटली कारो में बोल देना चाहिए that you have only seen the scanned copies and we understand that the original is lying with the custodian, which is this banker.
Okay. And based on photocopy and the certified copy जिनके पास पड़ी, उसके ऊपर मैं अपनी ओपिनियन,
उसके ऊपर आप अपना व्यू बनाइए और लिख दीजिए कि भाई हमने इस बेसिस पे बनाया है, बाकी ओरिजिनल तो बैंकर के पास.
सर एक चीज था कि अगर प्रॉपर्टी अगर जॉइंटली अगर रही, जॉइंट नाम से है, तो उस केस में हमको तो जॉइंट होल्डर का भी नाम डिस्क्लोज करना पड़ेगा. लेकिन अगर सपोज कीजिए कि डीड के अंदर में अनस्पेसिफाइड शेयर्स है, इन दैट केस बैलेंस शीट में सपोज कीजिए 10 जन की प्रॉपर्टी है, बैलेंस शीट में एक दिन लिखते हैं कि हमारी 1/10 शेयर है, बट द डीड डज नॉट हैव द मेंशन ऑफ द 1/10, इट सेज दे आर द जॉइंट होल्डर्स. उस केस में इज देयर एनी डेविएशन?
तो उसमें ना लीगल व्यू लेना पड़ेगा. देखो वो तो 1/10 रिकॉर्ड किया है बैलेंस शीट पे,
हाँ,
है ना. सो यू विल हैव टू सी वेदर लीगली what you've done is right or not, and you go based on that legal view.
But then the name of the other joint holders has to be given.
Has to be. That is a requirement of CARO.
और सर अगर सपोज कि ये कंपनी के नाम से ही प्रॉपर्टीज है, still should we write in the note to account that all the involved properties are held in the name of the company? Categorical confirmation.
नहीं, I did not understand.
जैसे हमारे जहाँ पर डेविएशन है, वहां तो हम लिखते ही हैं कि द प्रॉपर्टीज आर नॉट हेल्ड इन द नेम ऑफ द कंपनी, लेकिन जहाँ पर प्रॉपर्टीज आर हेल्ड इन द नेम ऑफ द कंपनी, देयर इज नो डेविएशन. शुड वी राइट ए नोट ऑफ कंफर्मेशन इन द बैलेंस शीट?
It's only an exception reporting.
Only exception reporting. So this will be your... अच्छा, चैट बॉक्स के अंदर में कुछ क्वेरी है, वो उससे मैं पहले ले लूं.
तुम लेगा क्या प्रमोद?
ले लेता हूं मैं.
ले लो.
The whether additional disclosures as per amended Schedule 3 has to be made where such disclosures are not applicable, are nil or not applicable to the company. Like कई बार ऐसा होता है कि the company has not traded in the cryptocurrencies, or the company has not, there has been no benami transactions, कि कोई proceedings नहीं हुई है. So whether this kind of general notes should appear in the balance sheet?
नहीं. Only
Not
if
required.
there is an exception, only then.
Only exception.
Only exception. Other than that, प्रमोद जी, what is very important is जहाँ ये जो फंड फ्लो का इशू है ना, जहाँ आप इंटरमीडियरी हो या होल्डिंग कंपनी, जो मेन ऑडिट रिपोर्ट में जाता है, that you should get it in the financial, whether वो हो चाहे नहीं हो, company should also say it is there or not. Okay. But other Schedule 3 related disclosures, वो खाली exception basis. You don't need to say there is no cryptocurrency transaction, there is no transaction with stock of company. ऐसा नहीं. Only there is something you have to bring it out.
लेकिन सर एक स्पीकर का व्यू था कि we should give wherever there is such kind of thing.
That is our view.
That is. चलो आपने यहाँ पर कवर कर दिया. लोन्स इन एडवांसेस के अंदर में लोन्स टू डायरेक्टर्स एंड अदर केएमपी जो लिखा हुआ है, वहाँ पर इवन इफ देयर इज नो बैलेंस आउटस्टैंडिंग एज ऑन बैलेंस शीट डेट, शुड वी गिव द ट्रांजैक्शन डिटेल?
Yes.
We should give the transaction.
Yes. Because क्या होगा ना प्रमोद जी, नहीं तो डायरेक्टर तो लास्ट डे पैसा निकाल लेगा. And he'll make it zero. He'll again take it on day one. So it is not the intent.
नहीं ठीक है, that is also my view. लेकिन एक क्वेश्चन तो सर करने से लोगों को भी समझ में आना जरूरी है ना, these type of things. अच्छा, one more सर, तो कुछ चैट बॉक्स में क्वेरी है हमारी.
Sure. So you want to take that, Heman?
We want just one. Whether additional disclosures तो हो गया आपसे.
अच्छा, बेनामी we have covered. I think एक question है बेनामी पे. How can auditor satisfy himself that the client has not received any notice? I think this is driven by legal confirmation. Yeah. You anyway are mandated to take a legal confirmation from the legal counsel, and you will have to take a legal confirmation that there is no proceeding, or you take a representation from the MD or the CFO. That is the only way you can satisfy yourself. कि भाई बेनामी property का कोई proceeding है कि नहीं. The other thing, long-term loan taken and defaulted to repay installments in time turned NPA and recovery process started. Whether it should be shown under long-term borrowing or short-term borrowings.
It will be short term.
हमें ये तो बहुत ही straightforward है.
Yeah.
It is short term. Where the company is given loan without mentioning particular date of repayment, but with a condition of repayment on demand or during a specified period as per the agreement, whether it can be said that the terms of payment are stipulated.
Yes, it can be, because it's repayable on demand.
If it is mentioned repayable on demand, it can be said it is stipulated. That's fine. I think both.
Repayable on demand is a stipulation, sir.
Yeah, I'm fine with that. I think these were the queries in the chat box.
नहीं सर, हाँ वो क्वेरी था. अब सर ट्रेड रिसीवेबल के अंदर में जो हम लोग क्लासिफिकेशन दिया हुआ है, that is due dates from जो easing है, which is with reference to due date. Now in case of many customers, there may be different due dates. उस केस में से compilation becomes very difficult, and how to rely again.
If you are not able to rely ना, फिर date of invoice से करें.
Date of invoice. That is the best thing.
That is the best thing if the guide, because the guidance.
और अगर client अगर suppose कीजिए client जो in general they give that 30 days credit in general, then you can say 30 days credit.
In general वाला भी मत लीजिए, because you'll be, if there is a variation, then there is a problem. But Prabhuji, mostly you'll find ERPs में capture होता है, but ERP नहीं है अगर company में, and you can't rely on great data. And date of invoice.
और confusion create होगा.
Okay.
ठीक. सर ट्रांजैक्शन विद स्टॉक ऑफ कंपनीज के अंदर में आपने कह दिया, वेदर ये आपने कर दिया. सर रेशियो एनालिसिस के लिए खैर आपने कह दिया सीएफएस की जरूरत नहीं. नेचुरली अगर खाली एज 23 के हिसाब से भी सीएफएस बना हुआ तो उसमें भी जरूरत नहीं है.
Yeah, confirm financial में it doesn't apply, whether it is AS23 or AS21, doesn't matter.
किसी में अप्लाई करेगा. ठीक है सर. Now in case of the companies involved in the service activity only, income by and earning income by way of brokerage and commission. इस केस में सर जो गाइडेंस नोट है वहां पर हर जगह सेल्स वर्ड यूज किया हुआ है. Whether sales include sale of this commission income also.
I actually don't know the right answer to this, but my intuitive answer would be that the sale will be replaced by commission income or income. But we'll have to read the guidance note to make sure that we are interpreting right. But I would say commission income will become sales.
Should be considered.
Yeah.
तो रेशियो एनालिसिस में भी सर जब देखते हैं तो काफी कई एक रेशियो जो बहुत एब्सर्ड हो जाते हैं, स्पेशली इन केस ऑफ सर्विस कंपनी जिसमें खाली सर्विस एक्टिविटीज है.
फॉर एग्जांपल
जैसे आपको ट्रेड पेबल टर्नओवर रेशियो, ट्रेड रिसीवेबल टर्नओवर रेशियो ईयर टू ईयर बिकम्स गिव्स अ वेरी एब्सर्ड फिगर्स.
सो प्रमोद जी, सर्विस कंपनी ना आईटी कंपनीज भी होती हैं.
हाँ.
आपके डेफिनेशन में सर्विस कंपनी आप उनको ले रहे हो जहाँ पे खाली कमीशन इनकम है.
हाँ, मैं उसे पॉइंट ऑफ व्यू से ले रहा हूँ. मैं बेसिकली
नाउ इवन इफ इट इज एब्सर्ड यू विल हैव टू स्टिल से कोई एक्सेप्शन
कोई है नहीं उसमें. 25% से ज्यादा वेरिएशन है तो हमको उसको एक्सपेंशन देना ही पड़ेगा.
दैट्स ऑल.
Yeah, I can understand, but then it gives a very absurd figure.
हाँ, but कोई exemption नहीं है.
हाँ. Just a minute, सर कुछ query है तो मैं देखता हूँ मैं. Sir, regarding the surrendered income.
हाँ.
Surrendered income के लिए है कि if the income is surrendered during the year related to previous year, whether previous accounts need to be reinstated. इसका मतलब सर ये थोड़ा सा ये नहीं आता. If there is any surrendered income, then the previous years की जो audit हुई है those were not correct. And
it's an important evaluation that if there is a surrendered income, then in the previous year audited account those incomes should be and not disclosed. Okay. Restatement will only happen if that income is material to those financials.
Okay.
To those years. If it is not material, you can record it in the current year and move on. But अगर material है तो restate हो जाएगा.
Just one other point, I think we also need to be conscious of what this means as far as controls are concerned. Because if you have income which has not been recorded, that could probably indicate that there are certain controls which are either not designed or not operating effectively.
I think that Pramodji, it opens like what Hemant said, 2-3 questions. That if there is a concealment of income in the previous year, how do you know current year money? So what audit procedure do you do to make sure that the current year income is reported? And then obviously if it is material to those years, you will restate.
सर राउंडिंग ऑफ के ऊपर में मेरा बहुत बेसिक क्वेश्चन आपसे कहा मैंने पूछा था आपसे कि 1 2 3 4 5 6 7 8 if it is to be rounded up in the hundreds can it be 1 2 3 4 5 6 7.89 or 1 2 3 4 5 6 7 9?
So both are acceptable.
Both are acceptable.
Yeah, but I
Only
would say अगर round off कर रहे हो तो decimal क्यों दिखा रहे हो?
Pardon? Sir, I could not follow you, sir.
Yeah, what I was saying, both are okay. लेकिन अगर आप राउंड ऑफ ही कर रहे हो तो why go into 0.89 and all?
सर इसमें इसलिए जरूरी है हमको क्योंकि आज हम बैलेंस शीट इनकम टैक्स रिटर्न फाइल करते हैं तो मुझे 2 सेट ऑफ बैलेंस शीट रखनी पड़ती है फिर बार बार उसको करना पड़ता है. अदरवाइज हम रुपी में तो राउंडिंग अप करती हैं यहाँ पर पॉइंट लगाए तो हमारे लिए इनकम टैक्स रिटर्न फाइल करना आराम रहता है. दिस इज द बेसिक. जहाँ
वो
पर
आपकी चॉइस है बट क्वेश्चन आपका है कि वेदर इट इज ओके, उस पे मैं बोल रहा हूँ इट इज ओके टू डू बोथ, है ना. बट वी हैव सीन कंपनी जो करोड़ में राउंड ऑफ करती है वो बैठ के 4 डेसिमल पॉइंट नहीं देती है, वो करोड़ में ही राउंड ऑफ करती है.
मैं समझ सुनाई नहीं दे रहा सर, आवाज क्लियर नहीं थी.
या व्हाट आई एम सेइंग अभी सुन रहे हैं समझिए, अभी सुनाई दे रहा है?
No, we can't hear you. Your voice is trailing off.
I don't know what is going on. Hemant, can you hear me now?
No, Amit.
Better?
Slightly, yes.
Okay. So Hemant, you can answer that question. Round off.
So, Pramodji, what we were saying is either of the options are acceptable under Schedule 3 guidance note जो है, दोनों option acceptable है. Point Amit was trying to make is अगर आप round off ही कर रहे हो तो 2 decimal क्यों दे रहे हो? I understood the point here that you're trying to make from an income tax perspective. So that's an option you can sort of evaluate and then decide whether you want to give the decimals or not give the decimals.
Okay. इसमें और कोई पॉइंट है क्या? मेरे तो पॉइंट जो लिखे थे सब एक सर थोड़ा सा ये फ्यूचरिस्टिक क्वेश्चन है. लाइक हम जो ये देते हैं कि वेदर द कंपनी इज एबल टू मीट इट्स फाइनेंशियल ऑब्लिगेशंस विद इन 12 मंथ्स, ये तो 1 साल का कंप्लीट हो गया सर. लेकिन सपोज कि नेक्स्ट ईयर 3rd ईयर 4th ईयर में कहीं पर डिफॉल्ट अगर होता है तो क्या उस केस में हमारे पिछले सालों की जो बैलेंस शीट जो साइन की है उसका कोई इम्पैक्ट आएगा? बिकॉज दैट फाइनेंशियल हेल्थ तो धीरे धीरे करके डिटीरियोरेट होता है ना, 1 साल में तो होता नहीं है.
तो अभी आवाज आ रही है हेमंत?
आ रही है.
Yes.
हाँ, तो प्रभु जी इसमें एक every balance sheet date you take a judgment. Okay. If that judgment has gone wrong after 2 years, doesn't mean you revisit the earlier signed balance sheet. Because you
Okay.
took the judgment based on data available then.
क्योंकि सेम चीज सर आपको जो कारो के अंदर रिपोर्टिंग इन्वेस्टमेंट मेड इज नॉट प्रेजुडिशियल टू द इंटरेस्ट ऑफ द कंपनी. अगेन यहाँ पर भी थोड़ा सेम चीज आ जाता है कि इफ द इन्वेस्टमेंट गोज रॉन्ग आफ्टर 3 years or 4 years, then what becomes what can be the auditor's responsibility?
नहीं, it is always driven by जब आपने रिपोर्टिंग करी उस दिन के फैक्ट से.
Okay.
Okay, it is never driven by hindsight analysis कि अगर 3 साल बाद कुछ गलत हो गया तो what did I do wrong. हाँ, आपने जब ये व्यू दिया था और उस समय आपने इवैल्यूएट नहीं किया था तो प्रॉब्लम है. बट इफ यू हैड इवैल्यूएटेड एंड टेकन अ व्यू, इट्स फाइन.
लेकिन जहां पर सर जो प्राइवेट इक्विटी पे जो इन्वेस्टमेंट होता है जो कि एक वैल्यूएशन रिपोर्ट के अंदर में होता है, अगर वैल्यूएशन रिपोर्ट आता है अनसाइंटिफिक क्योंकि 4 आदमी की 4 वैल्यूएशन रिपोर्ट रहती है, तो उस केस में अगर कोई इन्वेस्टमेंट होता है तो how do you rely कि yes investments are not prejudicial to interests of the company? थोड़ा सा एक tricky question नहीं हो जाता है क्या वहाँ पर?
नहीं, I did not understand the situation.
नहीं, मैं बोलता हूँ जैसे प्राइवेट इक्विटी में लोग आजकल इन्वेस्टमेंट काफी करते हैं एंड जो कि काफी ह्यूज प्रीमियम पर भी चला जाता है एंड ये तो टोटली एक वैल्यूएशन रिपोर्ट के ऊपर में होता है. देयर में भी 4 वैल्यूएशन रिपोर्ट, किसी ने एक ने 100 रुपया किया, किसी ने 400 रुपया कर दिया, किसी ने 300 किया. तो उस केस करने में हाउ डू यू इवेल्युएट कि दिस इज नॉट प्रेजुडिशियल टू द इंटरेस्ट ऑफ द कंपनी?
तो प्रमोद जी, ये सिचुएशन ना जनरली हम लोग नहीं फेस करते हैं बिकॉज लिस्टेड कंपनी प्राइवेट इक्विटी में नहीं डालती है और इवन लार्ज प्राइवेट कंपनी प्राइवेट इक्विटी में नहीं डालती है. दे जनरली पुट इन लिक्विड म्यूचुअल फंड्स, फिक्स्ड डिपॉजिट, इंटर कॉर्पोरेट डिपॉजिट. ओके, बट अगर आपकी कंपनी कर रही है प्राइवेट इक्विटी में एंड यू हैव अ वैलिड वैल्यूएशन रिपोर्ट बेस्ड ऑन व्हिच दे हैव डन इट, देन यू कैन नॉट से इट इज प्रेजुडिशियल टू द इंटरेस्ट ऑफ द कंपनी अगर वो इंडिपेंडेंट वैल्यूएशन है एंड बोर्ड अप्रूव है.
Now, there is any quick further query है क्या?
प्रमोद और तो कोई क्वेरी नहीं है, चैट बॉक्स में भी नहीं है.
इस पे एक लिखा in case there is a change in the auditor of the company, there are many disclosures in the revised balance schedule such as aging of trade receivable, trade payables, CWIP, etc. कहाँ लिखा हुआ है? Since the current year balance sheet is to be signed by the present auditor.
इसमें देखिए, इसमें I would say current auditor को ही, yeah, I don't, this is a good question. I don't know the answer to this. Hemant, do you know if there's a change in auditor, how do you deal with the comparative or Schedule 3?
Not really, Amit. My intuitive answer would be we need to see it, but go back and check.
We'll come back on this. I don't know the answer on this right now. Okay, whether it means I get a separate opinion from him on all the disclosures or whether I can issue the opinion including their disclosures. I will need to just find out. मैं sure नहीं हूँ.
Sir, don't we give the disclosure already in the audit opinion, audit report that the previous year figures have already been audited by a other auditor and our report is unqualified on that basis?
नहीं,
So
question वही नहीं है अपूर्व. Question वो नहीं है. Question ये है कि additional disclosures आ गए comparative के लिए. Even if you have given that statement, the earlier auditor has not audited that.
Okay. Yes. Okay. Got your point. Yes, sir. Right.
Okay.
Right.
So I don't know the answer. So Pramodji will come back to you on this. Then you can communicate to the group. So we'll come back to you by tomorrow.
प्रेशर हो रहा है, तुम चाह रहे हो.
तो तुम
नहीं, तुम दे देना, हमको तो नहीं.
को बोल देता हूँ मैं. Sir, I don't have more queries. I think मैंने जितनी queries बनाई थी आपने बहुत से cover कर ली है और बाकी जो है मैंने आपसे पूछ ली है यहाँ पर for the benefit of all our audience. Now, if there is more queries from the audience, I will again ask them to raise the query. And क्योंकि अभी सब कोई अपनी बैलेंस शीट बनाने में लगे हुए हैं तो बहुत छोटी छोटी सी क्लैरिफिकेशन की रिक्वायरमेंट रहती है, जानने की रिक्वायरमेंट रहती है. So if have more queries, we'll appreciate. अपूर्व और कुछ क्वेरी है क्या अपना? अपूर्व
नहीं, sir, एक query है sir, particularly related to NBFC. If you would like to cover that. Report, SAC report.
We couldn't hear you too well.
Hello.
Yeah.
Yes. So there's a query related to my NBFC. It's in a SAC report. As an auditor of a NBFC, you need to give a statutory auditor report pertaining to NBFC related to the prudential norms, whether a company has followed the prudential norms or not. So in that, hello.
Yeah, we can hear you.
We can hear you, Apurva, but both me and Hemant are not NBFC experts.
Okay, sir.
So
Okay.
here is what I suggest. You can route the query through Pramodji. We
Okay.
can check and let you know.
Okay, sir. Okay, sir.
अपूर्व और कोई क्वेरी है नहीं, तो आई थिंक तुम्हारे मन में मैंने तो बहुत सारी क्वेरी इनको भेजी थी जो उन्होंने सब एड्रेस कर दी, और बाकी अंदर जो भी मुझे डिटेल में जाना था सब पूछ लिया। आई थिंक वी शुड कंक्लूड दिस सेशन एंड आई रिक्वेस्ट यू टू ऑफर अ वोट ऑफ थैंक्स।
Sir, am I supposed to offer a vote of thanks?
या तुम दे दो।
Okay. So first and foremost, I would like to say, sir, it was a very interactive session wherein all the questions were addressed very prompt manner and in a very detailed manner. As many of the participants are doing audit of small companies which are non-Ind AS, still the answers were covered in a very detailed manner, which will help us as participants a lot. And I would once again like to thank both the speakers, Mr. Amit Somani ji and Hemant Singh ji, for taking time out from the valuable time from the schedule and giving us a detailed deliberation upon the changes. Thank you, sir. Once again from our association.
Thank you, Apurva.
Thank you, sir. Thank you. A lovely
Thank
discussion.
you. Thank you. See you guys. Bye.
Thanks. Bye.
Bye bye.